how does inheritance tax work? Let's check out an example today. Hi, I'm Kimberly Shapcott, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. Inheritance tax can be quite a complicated area, so we're going to simplify it today to give us an example of a couple where unfortunately the first spouse has passed away and the other spouse has inherited certain things from their deceased partner and how it all fits together. Because at this point we're looking at using their allowances if they've not already been used. So let's dive into an example so we can just show how it fits together to give you an idea of how it works. So you could be planning how you're expecting your estate to go, or if you're doing an estate for a loved one, how it fits together for the calculations that you potentially need to be completing. Let's dive into our example, which today we are going to have a widower who has lost her husband, so is just left now alone. Now, the widower herself, that is in her ownership now, owns her personal property, which is worth $750,000. So we've got her house. We've also got some savings, which come to the total of $100,000 in savings accounts I've got, and then she has got some investments, which is coming in at $250,000. So we have here got a total of 1.1 million in her name. Now, each person, as we are well aware, hopefully with anything inheritance tax-wise, has $325,000. Now, on the basis that we are a widower, we have also got the potential for another inheritance tax allowance. But let's not get ahead of ourselves. Let's have a quick look at our nil rate band. So we've got our nil rate band, which will add a further $175,000 for personal residence. Now, because the property is over is $750,000, that means we're definitely going to be able to use our nil rate band. So for this person, we've now got our $500,000. Now, in addition to this, we also have her husband's amounts that we can consider. And the question here for anyone is there the $325,000 and is there the $175,000? Now, to do these forms, you need to do a claim to enable you to use these allowances that have been inherited from her spouse. Now, in this case, we've got husband, but it could be husband, it could be wife, or legal partner. Now, that means in our case that we're looking at today, I am going to be incorporating another $500,000, which is our $325,000 and $175,000, which therefore means of our $1.1 million, we've now only actually got $100,000 that is taxed at 40%, which means we've got $40,000 of IHT, inheritance tax, to pay on this estate if something happened to her tomorrow. Now, what ways can we look at mitigating this inheritance tax? Well, on our example today, hopefully we can see that some of this is potentially going to be relatively simple to think of. So first things first is spend the money in savings. So all that money that's sitting there at $100,000, if we got rid of that $100,000, then she would have nothing over the inheritance tax thresholds. So go and have some fun, go and enjoy life, and that may be a good way to look at doing something. We've also then got our gift allowances, which we've got our $3,000 allowance as a general rule, and then there are other gifts that you can be giving away on a regular basis. So check out the video on gifts and other allowances on the channel, and you can see how that will fit together. Now, in addition to this, there is no inheritance tax impact on that because you're just gifting within your allowances. Your other option, if you're not planning on spending it and you want to give it to your family, is you could gift the money on that you have available, whether it be gift the 100,000 savings, gift some of the sell some of the investments, gift some of the investments. There is a few options there, which you would be able to gift that away, and you would use a 7-year rule, which means you've just got to live for another 7 years and then it would drop out of your estate entirely. If it's something happens to the widower in the meantime, then that would be subject to a lower inheritance tax rate if it's over 3 years, and it goes to your 32, 24, 16 and 8% progressively over the 7-year period. But check out the video on the 7-year rule, as that might be a good way of doing things. We've also got some other options available, and advice would be beneficial, and it would be a good cost-effective way to save 40,000. So to spend maybe a few thousand on some tax planning advice would actually potentially save 40,000 tax for this case. So as we can see, the situation here is very much that some tax planning, some thought process in it would actually save 40,000 of inheritance tax. Whether it's literally a matter of going and spending it and having some more fun, whether it be gifting it and just making sure that you're fitting in with the gift allowances, or the potentially exempt transfer 7-year rule allowances, there is definitely scope here for reducing inheritance tax. One thing is to be aware that there needs to be a form completed to ensure that the claim is made for the husband in this case's allowances to transfer them across. So you just need to be very wary when the first person passes away in a couple to see what allowances are actually used, and then any allowances that are not used can be transferred to the remaining spouse and then be used on their passing in the future at some point. As you can see, hopefully with this example, a little bit of planning will actually go wonders. What we can have a look at doing is some other examples. So if you do have any cases where you want to throw something over with some different things, we can have a look at some of the options that may be available, because every circumstance and situation is going to be different, and it's just a matter of assessing what is going to be the right thing for you at the right time to see how it all fits together. Happy inheritance tax planning. As you can see, there's some areas that are simple and some areas that are more complicated, but hopefully that has given you an idea of how it could fit together for you or your family members, and how you need to be looking at things if you're doing any planning in the future to ensure that you're maximising the allowances that are potentially available to you. Hopefully today you've discovered exactly how inheritance tax works with our example. If you do have any questions, then please do leave a comment. Please like the video and do subscribe to the channel, and let's make tax less taxing. Let's make tax less taxing.